What's going on, people? If you don't know who I am, my name is Clarissa, and I'm Javier's partner both in life and in business. And in today's video, I want to talk about how to prevent and handle chargebacks if they were to occur. All right, so how do we prevent and handle chargebacks if they were to occur? First things first, let's identify what a chargeback even is. A chargeback happens whenever a client disputes their payment to their banks or credit card companies. So basically, they will just either do it through online or call them and tell them like, I didn't make the dispute, I didn't make this payment, or I didn't authorize it. I did it, but I didn't receive the item or the service, and they basically dispute the transaction. The client will receive their money back, and us as the company that provided the transaction, we are not only giving the money back, but we're also incurring fees. So we're losing more money on top of it. Now the fees will depend on the payment processor that you have used, but this is basically what a chargeback is. So whenever a client disputes the payment that they made towards your company. Now, oftentimes the banks will always side with their clients unless we as the company provide strong evidence that we delivered what we promised and that the transaction was legitimate and the client is taking advantage of the opportunity of being able to use this service as the chargebacks. Now, too many chargebacks, what can they do to us as a company? It can freeze our merchant account, ultimately lose it, damage our reputation with the payment processors, and delay the cash flow. Sometimes some payment processor will also, after you receive a certain amount of chargebacks, they will also put reserves. So anytime that you make future transactions, they can say, okay, I'm gonna keep 10, 15, 20% of whatever you're collecting into a reserve in case we ever were to get a chargeback in the future. So chargebacks are something that we want to prevent from happening altogether. But if they were to happen, then we would want to make sure that we are winning them, mostly if they are high ticket. When there are something low ticket like a $97 or something like that for like monthly subscription, they are a lot more lenient because clients sometimes they just forget that they did it and stuff like that. So like the payment processor is a lot more lenient. But when we're talking about thousands of dollars per transaction, the payment processor will start getting more strict on us. And that's the reason why I always recommend all of my clients to always have multiple payment processor in case you need to be switching payment processors because of chargebacks. So the goal is always to prevent the disputes before they even have happen and have a winning system if and when they do. So let's get into the first couple of steps that we need to make sure to have. Like number one is always having clear expectations up front. So in the sales process, we want to make sure that we're not overselling, right? And that we're setting up proper expectations. We need to always provide a transparent contract with outlining the deliverables, the timeline, and the refund policies if we have any. I know for a funding offer is a little bit complicated to have refund policies because, like sometimes the client itself is the one that is preventing us, from delivering what we had promised, which we will get into it in a second. In your contracts, besides all of this, you want to make sure that you're adding a chargeback clause to your contract, which looks something like this. You want to have both the initial, like the client, both having the initials and also checking the box. And in this chargeback clause, what we are saying is, I agree that I will not contact my credit card company to initiate a chargeback after this agreement is in effect. I accept that under this agreement, I have the duty to read this guarantee policy, give it to me, and have done so. I attest that this duty and sign the order form to execute this document. Then you can add whatever else you want. We also added that if the client does do a chargeback, we will assess a 30% fee based off of the transaction that was completed before. And in the event that we always want to be fair, obviously, like we want to know, like, if one of our clients or potential clients is signing this, we also want to be sure, like, okay, I understand that you as a company, you have to protect your back, but like, what about me? So we always add, like, the only event that the client has the right to file a chargeback is in the event that the client has issues with the company, and they fail to come to an agreement based on the issue, or the company fails to answer after a reasonable amount of communication and attempts from the client. Meaning, in simple words, let's say that the client has some issue with you, you're not doing your part, and it's you as the company fault, and the client keeps on telling you, like, hey, like, can we resolve something? Can we come to an agreement, partial refund or something? And you neglect the fuck out of them. You don't respond to any of their conversation, to any of their messages, to their phone calls, and to all their multiple attempts of trying to come into an agreement. If you fail to do that, then that's the only time that the client is entitled of doing a chargeback, because they're doing everything in their power to come to an agreement with you, and you're just neglecting them. So I would recommend adding a chargeback dispute where the client is initialing, checking the box, putting first, last name, date, and signing it. This signature right here is a second signature, right? Because we're also putting it at the end of the contract where they're signing the actual contract. This is just an added clause to the contract agreement. Besides that, we also want to add funding delay instances to your contract, which looks something like this. Sometimes we all know that, like, when we're doing funding for clients, they end up doing things that delay the process. They may, get a late payment, have apply for a car, for a house, whatever the case may be, increase the utilization, or applying for other things that ultimately, like, end up giving them a more increase, and therefore we are not able to complete our promises, right? And this is something that is out of our control as the funding company. We can set all the expectations, have all the proper communication with the client, but if the client does whatever they want, and they hurt the process being able to get funded, there's only so much we can do. So that's exactly what this clause is for. Funding delay instances is basically saying that the client acknowledges that they have to work with us in order to help them get the funding, and that they also have they need to be always within the parameters of being able to get funded. So they need to maintain a FICO score of at least a 650 or higher, avoid any negative marks, including missed payments, delinquency, bankruptcies, or collections. They need to keep their utilization under 10%, and they cannot apply for any personal or business credit products without consulting with us first. If they do any of this and they fail, we as the company we have the ability to pause our services, and we are not supposed to be completing our services if they do any of these things outlined. And obviously you can always add, remove, modify anything that I'm showing you today. But basically this will help you as the funding company to protect yourself if the client says, I didn't receive funding, but they just apply for a car, they financed a new car, they got new credit cards, like they got 15 hard increase the day that they signed up with you, without discussing anything with you, or they started maxing out all of their credit cards, and now high utilization, they can pay it back, you can get them a loan, and now you can get them funded. In that case, the client is not entitled to receive a refund or to do a chargeback on previous payment that they have paid, because it's their fault. They did this to themselves, and it's out of our control. We can only do so much. Then require them to sign this agreement. Obviously, use PandaDoc, DocuSign, Go High Level, whatever the case may be. And the contract, this is crucial, the contract must be signed by the individual, not the business name. Like, since we're doing business funding, a lot of the times they would want to do the contract under the business name only. Do not do that. It has to be both of them. Like, if they really want to do it under the company, it has to have both names, the company name and the client's name. and it has to match the credit card name or debit card. Because sometimes they want, oh, my investor, oh, my this and that. It has to match the same exact name. If not, you will have to do it under the person that has paid, or add it at least, because then, like if you do end up getting a chargeback, and you're providing the information to the bank, and then you have the contract under, John Doe, and then the credit card is Mary Jane, they're gonna be like, oh, this is a different person, doesn't not matched, lost chargeback. So you want to make sure that they are matching. Same goes if it was the personal name on the credit card and the contract is on the business name, or vice versa. You want to make sure that they match. Obviously, keep transparent communication the moment that they join, like send welcome emails, onboarding videos immediately after they purchase, so that the client is reminded of what they signed up for and they have clear expectations of what is going to happen moving next. Provide them with milestones and timelines so that the client knows, what stage you're at, what is supposed to happen next, how long this will take, and they can be clear-minded. Respond for any inquiries within 24 to 48 hours to prevent any frustration or like the client feeling like, oh, this is a scam. Next, assign to your client's success manager, or you, if it's you doing it, to check in regularly. Check every 24 hours, every day. Every day send a message. You always want to send, to be the one that sends messages to the client, not the clients reaching out to you. And then document every interaction that you have with the client. So whether it's through email, Slack, notes that you may leave in your CRM, on your circle, on your school, whatever the case may be, take consideration of everything that you have done with the client. Also, any calls that you do, keep the recording of every single call that you do with the client and put them into a Google folder. Keep proof of services delivered. So if you do have a course or a platform that you make them sign into, make sure that you're keeping the logins the login active logs, any onboarding forms, any call recordings, any type of communication. Keep it all into a folder. And then once the funding is completed, have the client sign a service completion agreement. So this is a separate agreement that you're going to send them the moment that you do complete the funding, that basically saying the company completed what we promised, what the client paid us for. The client is not entitled to do any chargebacks because we did what we promised, and is supposed to complete any outstanding payments if due. So this ties in if you're doing a percentage of the backend, like this is another document that is saying that they owe you the success fee, or even if you're doing a payment plan of a flat fee and they owe you still money, like this is basically saying like they have to pay the rest of whatever is due. Next. What would be next? Let's say that you do receive a chargeback. What do you have to do next? Number one thing I would do is set up a Zap that notifies you on Slack or whatever you use, Discord or whatever the case may be, to notify you anytime that a chargeback happens. Okay, so it's very simple. Zap, like trigger a new dispute, send a Slack message with the information. You will put first and last name, submitted a chargeback for, the amount, what is the reason that they allegedly said. So like this, sometimes, like you want to take care of chargebacks the moment that they happen as fast as possible, right? And sometimes you may receive just an email and you don't see it, whatever the case may be. I'm always on my Slack, so I always see this, and I receive an automatic notification the moment that someone were to submit a chargeback and the reasons and what product that they did the chargeback for. As soon as you receive the chargeback notice, gather all the details: client name, transaction, amount, date, the reason that they said that they canceled for. For example, this one is a chargeback that I received, and they said that the subscription was canceled. I won the chargeback because the client never requested to cancel the subscription. I don't have no proof, like there's no proof of them of signing, requesting a cancellation form or anything like that. So I want the chargeback. Okay, notify the client success team immediately so that they can reach out to the client, which we're gonna get to in a second. Start collecting your evidence. Okay, so you want to create a chargeback response packet in within 24 to 48 hours. This is going to include every single contract that was signed with the refund policy highlighted, proof of client usage. So if they logged in into anything, if you have like a course and you can see like how much they've watched from the course, can be very good. Any calls, any messages, communication records, proof of service delivered. So that's when the service completion agreement comes in handy, because we don't really have like this. What the company would want to see is like a tracking number, like that it shows the thing was delivered. But unfortunately, we don't have like a physical product, so we don't have a tracking number to say like, hey, this got shipped, like, and it was delivered. So that's what we can use that agreement for. And then confirmation of client understanding. So if you have any recorded of sales calls and stuff like that, you would want to have the transcript of it, because unfortunately, videos are not accepted by the banks as a valid evidence. Go figure why, but a video is not a valid proof for them. I guess maybe they're too lazy to wanting to watch the videos, but they're not a valid proof for them. Instead, what I would want you to do is to have every single call that you have done with the client in a Google folder, and that is labeled with the client's name. Take screenshots of all of them, right? Of all the recording calls, and demonstrate this to the banks, because this one can demonstrate that you have consistent communication and support with the client and can strengthen your dispute case. But the video itself, you cannot upload it. Or even if you do, they're not going to take it into consideration. They're going to just tell you that it's not a valid proof for them. Next, gather all your information, because you're gonna need to like, if a dispute is already filed, you have to respond to it regardless. But what I would do, which a lot of people don't do, is reach out to the client. Sometimes it has happened to me as well that they did it. They were like, "Oh, I'm sorry, I didn't know it was you. I thought I was already paid." Like, they can give you excuses. They may be lies, but majority of the times you can resolve it with the client, and they will draw the dispute. So basically, they can call back the bank and say, "I made a mistake. I didn't recognize the transaction at first, but the company reached out to me, and it was legitimate. It was my mistake." And they can withdraw the dispute themselves. At that point, you will still need to submit the information to the bank, to the dispute form, but you would put in the reasons. Instead of saying like, "Oh, I did deliver, the client is lying," you can put the client already withdrew the dispute, and that, like, it's almost an automatic win for you. So try to reach out to the client. Maybe there is some type of misunderstanding. "I didn't know it was you. I'm sorry. Let me take that off." Now, the bank once you have all of your evidence collected, you want to submit the chargeback package through the processor's portal. Obviously, this is going to be a little bit different from depending on which payment processor you are using, but normally it's fairly user friendly. You will have a section to upload the documentation, a section to write down a response of everything that has happened, and then you just submit it. It's normally pretty simple. So you would want to gather all of your information that we talked about before. And then you also want to write down everything that has happened. Obviously, use AI to your favor. Use ChatGPT, make it sound like a lawyer, and upload that as well. Keep everything factual and professional. Avoid emotional language, obviously. Next, what you would want to do to prevent them is track the patterns, right? If you have multiple chargebacks and they're always happening for a specific reason or for a specific product, adjust the sales, adjust the offer, set better expectations, adjust your contract, and mention it every single time during your onboarding call. This has made a dramatic change for us as well. Not that we have ever gotten that many chargebacks, but maybe that's the reason why. during the onboarding calls, we always say it, like, if you are going to be doing a chargeback, you are going to be blacklisted from our company, and we are going to take legal recursos on it, because it's not fair. Like, we can all, we're all adults, we can have a conversation, and if we do need to have a conversation for refunds or anything like that, we can totally have a conversation, and I'm pretty sure that us as both adults, we can come to an agreement together. But resorting to a chargeback is like stabbing from behind the back. It does, it's not cool. So majority of the time, I always mention it during onboarding calls, because it will help you prevent them. Always have multiple processors, diversify. Stripe, PayPal, fan bases, Easy Pay Direct. There's so many out there that you can use. Always have multiple ones, because if you end up getting chargebacks and being hit with a reserve, you want to be automatically going to a new payment processor right away, without having to, like, oh, I have to apply now for a new one, wait to go through underwriting, and having to delay the process. So make sure that you always have multiple payment processors set. Next, obviously, for both sales and the fulfillment team, never overpromise the results in a sales call. Set realistic expectations. There's this is never going to help you, like, both for chargebacks and for anything else for that matter. If you're over promising and then you're always under delivering, like, because it's not that you're under delivering, you're delivering what is normal, but at that point, it looks like you're over delivering because you over promised. So it's always better to do the opposite: under promise and over deliver. Always document everything, what was said, what was delivered, and what the client agreed to, and follow the no surprises rule, right? So the client should never feel misled from the sales calls, or also the onboarding calls, and the communication that they have with the client success manager. And then prevention is always the first line of defense with winning chargebacks, because it's much harder. It's much harder to winning one than preventing one. So again, have clear expectation, clear communication, and be upfront with your clients, and you're not gonna go have any problems. But if you do were to get in a chargeback, remember to have every single documentation possible that you have submitted, that you have provided the service for your clients. And if you want more help from our team to set this up, please click the link below and book a call with my team.